In the last video, we saw the S&P 500 come up to a smart money sell level. What was the result of that action? You can see it right here in the stock market's performance. In the previous video, the S&P 500 was 4124.50, but it was also starting to challenge this smart money sell area between 4103 and 4176. The problem with smart money sell areas is that people are selling there, especially the smart money, and they have very deep pockets. When they sell, the market feels it. When they buy, the market feels it, and the market felt it yesterday when they started selling. All markets are interdependent and intercorrelated. The crypto market serves as a very good barometer to measure risk on or risk off behavior. And what do we see here? The crypto market is basically green. This is a fascinating time. When we looked at Bitcoin yesterday, we did our smart money buy and sell levels, and we also did the CTKS Code, our daily three-dimensional risk management. Just around that area where the arrow is pointing, we said the potential probability of a downward action around here was 20%, neutral about 10%, and up about 70%, even though the S&P 500 was coming into an area of smart money sell resistance. The question is, why did we come to that conclusion yesterday? It's all about the structure of Bitcoin and how Bitcoin is interrelating to these smart money buy areas and sell areas. We saw Bitcoin starting to gather momentum, even though the S&P 500 was coming up and Bitcoin was coming up as well. You can see there's a very good correlation between what the S&P 500 does and what Bitcoin does. But what is Bitcoin telling us right now? It's signaling risk on behavior. It's signaling the potential for the S&P 500 to re-challenge that smart money sell zone. As a professional trader or investor, it's very important to understand how the markets intercorrelate with each other. We can see here that the S&P 500 futures are currently pointing towards the S&P index opening around the 4131 level. Let's have a look at the S&P 500. When we put 4131 on the S&P 500, what do we see here? That is a very, very powerful move, and Bitcoin has already picked up on it. When you trade, it's very important, and of course when you invest, it's very important to cast your eye widely. A lot of people don't look at a particular market because they think it's irrelevant. Please don't think that way. Every market is relevant if it makes you money with what you're focused on. The CTKS methodology is all about looking far and looking wide and really understanding what you're doing. Before you buy and sell, you must master trading and investing psychology, and that's what we call real wealth and positive excellence. A lot of people simply don't want to look here. They just want to buy and sell, but their emotions will overtake them. Buying and selling can be a very fear-based thing to do. Why is that the case? Because a lot of people just crave certainty. They will say, tell me what is absolutely happening. What will the S&P 500 hit tomorrow? What's Tesla going to hit? What's Microsoft and Apple and Bitcoin and ADA and XRP? Nobody can tell you those things, only the market. And the market serves to desynchronize people before synchronizing them. A lot of people, when they start their journey in financial markets, they get into the panic zone and the blame zone. And what's this all about? This is just about the fact that people want certainty. They want certain returns, and the only people who promise certain returns are scammers. Scammers are really easy to spot. They'll say, you don't have to do any work. What a lot of rubbish. If you think about life, you have to work hard for everything you have mastery in. That's your first red flag. In truth, the harder you work, the more intelligently you work, the more you will be promoted through life. That's just an undeniable fact of existence. The second thing they do, risk-free, no losses. Of course the financial markets will desynchronize you and you'll get losses. This is just part and parcel. We use our losses as learning experiences. Taking a loss is not a personal reflection. It's just the market desynchronizing you. That is it, and that's all it is. If you win, you haven't won. You're just in synchronization with the market. Of course, that's a great thing. But getting into Zone 3 and Zone 4 is what we're all about as a global family. One of the fastest ways to get into synchronization with the market is to do your daily CTKS code. This is all about three-dimensional risk management. I'll show you it in application. But one thing to consider, you control the trade or investment, but it's the market that controls the return. And that market return is based on your active learning, your knowledge and your courage. One thing that we did in yesterday's video, we just put a little bit of a note on the chart as to where we felt the market would go to in the next 24 hours. We gave the up probability 70%, and even though we saw that the S&P 500 was coming into an area of resistance, this was a pretty bold call. But if you think about it, the markets are always trying to desynchronize people. With that in mind, you can actually do your CTKS codes much more effectively. So let's just do one for today. Bitcoin is currently trading at 28,644. Therefore, we'll just mark that particular point on our chart so we can refer to it back. We'll refer back to it tomorrow. What do you think the smart money will do? Here, you're witnessing a couple of interesting things, so we need to do a multi-dimensional analysis, and we're going to dig into this a little bit more deeply. We can see the S&P 500 futures have come down, but we know where they are in terms of the index. They're up here at 41.31. That's getting into that smart money sell area. And just refer back to episode 852 if you'd like to learn more about futures and indexes and how to read them, and more importantly, how to apply them. One thing that you could think about, the S&P 500 is actually smack bang in the middle of a lot of sell resistance. What do you think the sellers are going to do? What do you think the buyers are going to do? Do you think there's a more or greater probability that the market will move sideways instead of up or down as the sellers and the buyers try to fight with each other? Doing your CTKS code each and every day is vitally important. Why is it important? Why can't you just slack off and just don't worry about it? Because if you slack off and don't worry about it, you will become desynchronized. What you want to do is to try to figure out how the smart money would think. Not retail investors and traders, not retail, smart money. They have a completely different mindset. That means that you might want to go counter to the retail trend. Let's do a little bit of a logical exercise. With the S&P 500, we know that the smart money is going to try to sell that rip down, because there's a lot of weight of sellers there. So what could happen with that, and how could it affect crypto? And of course, if the S&P 500 actually traps a lot of shorts and they all get liquidated, they'll get stopped out and you'll see a big spike up. But how long will it be lived? That is always a critical thing. When you look at these sharp angles here, what you're actually seeing is spikes either on the short side, which forces the price to go up, or on the long side, which forces it to come down. So just be aware of this. Just recently, we had a lot of shorts getting liquidated because they've been listening to the news, and the news is really ugly. But we realistically don't care about the news. We're mindful of it, absolutely. We know it, definitely. But we don't pay that much attention to it because news is sensationalistic and it's always a drama. Just drama after drama after drama. What you want to do is to look at what price action is actually telling you. All professionals look at price action. Let's go through the thought process. In the S&P 500, what is the probability of going down, neutral, or up? Well, if you think about it, the S&P 500 is pretty much stuck. It's nearly midway into this smart money sell zone. It's just a little bit lower, so it's already encountering a degree of resistance, but it definitely is up. But we're talking about what happens next, or what happens now. The sellers will not want the price to come up any further. They will be selling it down. And the buyers, seeing the bit of a rip here, will be wanting to buy. They will actually clash with each other. So it's got a good percentage probability of just going neutral. What does neutral mean? Does that mean it's just a flat line like that? Of course not. We don't see flat lines like that anytime, except across the weekends, but only in terms of major stock market indices. Crypto trades 24 hours a day, 7 days a week. There is still the probability, and I believe it's pretty much equally weighted, of either going down because the sellers gain control or going up because the buyers do. It's pretty much of a muchness, but the neutral part is overbearing both the down and the up case, in my eyes. And of course, when you think about if the longs get liquidated, that's going to push price down. But if the shorts get liquidated, that's going to push price up. Just be aware of these factors and always pay attention to what price is doing. That is your ultimate guide. If we do get sell action on the S&P 500, it's quite possible that Bitcoin will revisit this smart money buy area. And this smart money buy area is between 27,843 and 28,038. But we also note that there's not a lot of overhead resistance. If the shorts capitulate, we could see Bitcoin do really, really well. Just bear in mind what you're doing when you come to active investing and trading is just watching what price tells you that is going on. Don't make a fixed position. Have 3 positions and be flexible. When we look at the news data, we saw that the Dow dropped nearly 200 points after the jobs data. That put positive pressure on the bond market and took the heat off yields. It will definitely be a trader's market for the foreseeable future. So if you don't know how to trade, you're leaving a lot of money on the table. JP Morgan CEO Jamie Dimon says the worst is not over in terms of the banking crisis and the tremors will be felt for years. He pointed his finger very squarely at the Federal Reserve and said it didn't stress test banks on what would happen as the Fed rates increased, and they increased at one of the fastest rates in history. Why did they increase at such a rate? Because inflation has been biting every country all around the world. Pakistan raised its key rates to a record 21%. Russia didn't want the Ukraine to join NATO, and it definitely didn't want Finland to join NATO either. And look at what's happened. The Ukraine, of course, is at war, and Finland just joined NATO. There's a very similar thing that happens inside trading. If you're afraid of losing money, that fear will come true. The way to overcome that fear is just look at levels. Don't look at money, look at levels. Xi Jinping is at it again. China and the US are adversaries. It's very important to just call a spade a spade. That's what they are. China doesn't want the US dollar. It wants the yuan. It wants every country to use its currency. Malaysia, China to discuss an Asian fund to cut US dollar dependency. And of course, this is impacting the DXY. When we look at the main markets, we've seen a little spike in the VIX. We wouldn't be at all surprised if we see a big spike in the VIX. Why is that? Because junk bonds and high-yield corporate bonds are coming down. What are these about? What's junk bonds and high-yield corporate bonds all about? That's a risk on or off sentiment indicator. When you see a big spike in junk and high-yield corporate bonds, you can be assured that the market is going up. When you see it starting to turn around, you can be assured that the market is starting to turn around as well. And that's exactly what we've seen in the NASDAQ 100. These are the futures. There's been a flight to safety into the bond market. This is very, very recessionary behavior. We've seen yields fall off as the market is pricing in that the Fed can't keep on increasing rates. So therefore, people are getting out of the stock market into the bond market. And that previous article I showed you about bond volatility, bonds are really volatile right now. There's also a safety haven flight through gold. Gold is doing incredibly well. And of course, Bitcoin is doing well because they're very much substitutable. And when we see the dollar coming down and down and down, we understand that all of these issues are impacting each other. And we recently saw on the OPEC plus cuts to production, we've seen oil just rally. One thing to keep in mind, with a falling DXY and yield starting to fall down and cut their levels of support, don't be at all surprised if there's not upward momentum in the indices, and especially the S&P 500 and Bitcoin. Of course, gold will also benefit from this. One new thing that I thought you might like to look at, when you look at copper, copper, as you can see, is a very good indicator of the financial health of an economic system. And when we overlay copper on the S&P 500 and Bitcoin, what do we notice? Is there a correlation? Are they moving basically in the same direction? Yes, they are. There's, of course, some lags in there, but just be prepared to look at copper. If copper starts to sell down dramatically, it could be actually foretelling a lot of weakness in the major market indices. And of course, that will flow through to everything. The probability of a 25 basis point increase in the federal funds rate has dropped from 57.2% 24 hours ago to 40.1%. But it's still 40%. It's not 0% or 1%, it's 40%. The good news is that it is coming down, and that's actually impacting the markets positively. The Fed is being very data-driven at the moment, and it saw from the JOLTS job openings, there were less job openings than anticipated previously. That means the Fed's demand destruction days are just working beautifully for the Fed. This is driving a downward momentum in the Fed's funds rate probabilities of going up. We have a couple of other things that are coming through this week. ADP non-farm employment change, the ISM services PMI, unemployment claims, average hourly earnings, non-farm employment change, and the unemployment rate. It's very important to consider. The Fed has got a lot of attention in the market at the moment. A lot of people, when they're new to the market, they don't understand that mindset is very, very important. In fact, it makes the difference between losses or consistent gains. People just don't want to look at mindset. After all, what's mindset got to do with making money? That's like an Olympic athlete saying, okay, I'm an Olympic runner, for example. What's mindset got to do with me being an Olympic runner? Don't I just have to move my legs? That's clearly not the case. As you know, mindset makes or breaks athletes. What about a professional tennis player? What has mindset got to do with just hitting a ball over the net? Everything. What about a professional dancer, for example? Has mindset got anything to do with the capability of going to the top? Absolutely. Everything comes down to mindset. I have no concept at all why people just look at mindset and say, it's unimportant. Maybe it's because they look at financial markets like a casino or a roulette table. What's mindset got to do with it? You just throw the money on the table and the house takes it. And that's exactly what will happen inside financial markets if you don't focus on your mindset. From what I understand, we're one of the few crypto channels that actually focuses on mindset. It's critically important. It's embedded into the process of becoming professional. If you want to be a professional and you're not looking at your mindset, you're in trouble already. It's like being a professional athlete and your mindset is, I'll run tomorrow. Those Olympic glory days may be forever withheld with that kind of attitude. It's important to have a positive excellence attitude to everything that you do in life, but especially in financial markets where people crave certainty, and there is no certainty in financial markets because price is always moving in a wave. In a 24-hour period, it can go up, down, and consolidate. You heard it, 24 hours. It can do all three directions. That's why you need to think differently. Please let me know in the comments which one of these green words is your favorite. I'd love to hear your thoughts. Please also pop in what you think the markets will do in the next 24 hours. This is very important, not for being right or wrong, because that's not important at all. When you consider price, what it does go up and down, and everybody is in a different time zone. So don't care about what other people put. For them, it could have been completely right. And if it was wrong, it's not wrong. It's just learning. And that's what getting synchronized is all about. If you're worried about being wrong, the financial markets will be brutal to you. The key is to learn. And that's why we have the CTKS Creed, because these are creating better habits for a better life. The key words that I would like to read out to you today from the Creed, and these are just daily positive affirmations for abundance, financial success, and happiness. These are the words. I am dedicated and committed. I win or learn and never blame. If you find yourself blaming, and which is a very natural human instinct, what actually occurs is learning stops. When learning stops, desynchronization starts. When desynchronization starts, your money goes down. That's why it's incredibly important to not think about losing and never blame, because if you blame, you're setting yourself up to get not only disempowered, but also to get desynchronized. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye.